Hey, it's Rav. Welcome to the Everyday Investor TV show, the show that teaches all of us how to grow our money. Each week, we bring in an everyday expert to teach us, everyday people, a different strategy. Remember, whenever you're offered any type of investment opportunity, you always want to ask 4 questions. 1, what is the return on investment? 2, when do you get that return along with the money that you put in? 3, what is the minimum investment amount needed? And 4, what is the risk? What is the downside? The reason we do this show is because often the challenge is that we take our precious time, we go to work, we get paid in order to provide. You ask, what's the challenge? Well, if we have a job, we're blessed. I really believe that, but wouldn't it be great if money could make us money? You could take that precious time and you could spend it with family, friends. You could engage in a purpose that's greater than yourself, still keep your job, have a hybrid of both. Thanks so much for watching. Don't go anywhere. We'll be right back. On this week's episode, we're talking to Rachel and Neil Oliver, and we're going to learn how we can make money investing in rent-to-owns.
My draw to it was from an investor lens where I don't like tenants and toilets. And I really wanted to invest in real estate without those typical hassles. I wanted more of a purposeful way of making money.
Hey, it's Sarah Larby here. Did you know that if you are selling your home or investment property, one of our preferred agent partners will sell it for you for free? That's right, 0 commissions. Head over to our website, everydayinvestor.com, to find out more.
Terry Lynn Legault from Canada's Mortgage Choice here. Have you been working with a bank and they've told you that they can't get you approved for purchasing a mortgage because you have bad credit, because you've gone bankrupt in the past? Have you been working to improve those things and still not getting anywhere? Did you know that there is alternative lenders who will look at these things and take them into consideration differently? Meaning that you might have to pay a higher interest rate now, but we can work with that, get you into a home, and revisit that in a year. If this is something that sets home with you and you think we can help you with, call us today at Canada's Mortgage Choice.
Hey, it's Rav. A few years ago, I learned how to trade stock options by taking the Theta trading course. My son, my friends, myself, all of us benefited immensely by applying their strategies, and I want you to have that same benefit by taking their course as well. I'm not receiving any monetary benefit whatsoever by telling you this. It's just that, as you know, I believe that knowledge mitigates risk. Visit their site to find out more. Hey, it's Rav. Welcome back to Everyday Investor. I'm talking to my dear friends, Rachel and Neil, or is it Neil and Rachel? Which one is it? Who comes first?
Neil and Rachel. Neil and Rachel for sure.
It depends who you ask.
Depends who you ask, yes. And so we're branded Cash Flow Queen, Mr. No. Rachel, why do we call him Mr. No? Seems like such a pleasant guy. It seems like, I mean, you've got some beautiful children. I can see him saying yes all the time to those wonderful girls. Why is he a Mr. No?
Anytime he hears an idea that's new, unfamiliar, his immediate response is, no, we can't do that. We don't understand all the details. We have no background in this. We don't know anyone who's doing it. Like every excuse in the book is coming through his mind instead of just saying, oh, this could be interesting. Let's explore it, which is my approach.
Yes.
His approach is to shoot it down because it's not familiar.
But then
he's going to try to defend himself. He wants to defend himself.
No, the truth is, Rav, I require information to make a decision. And Rachel tends to come in with 5% of the deal information and then expects me to make an answer based on that. Well, my answer is always no. That's how I operate. That's how my brain goes. So she's learning that now, that she needs to provide more information and she'll get a different response. Sometimes it's still no, though. Don't get me wrong.
No, but what's really fun is that later, once you get the information, you say yes. I mean, I think there's even something biblical about that, where one person says yes, but they don't do it. The other person says no, they get some information, and then they end up doing it. So, Rachel, I'd rather the latter, if I'm married to someone. But listen, you originally said no to this concept over a decade ago of rent-to-owns. And here we are over a decade helping, hundreds of people, incredible success rates, written a book on it. So, I think we're happy that you said no, learned about it, and here we are. Yeah?
Yeah, that's exactly how it played out. We learned about it, we got some tutoring on it, and then we basically engineered it.
Yeah, I was going to say that because there's no like kind of set way to do this type of investing vehicle, if you will. So you guys created your own formula that you feel like is a winner. And when the climate changes, like even these days, as we're early 2023, you've adapted, and people are doing different things, and you're coaching them through that. And so, yeah, we'll talk a little bit about that. Why rent to own? And I've heard lease to own. I've heard different kind of terminologies. It's kind of it's the same thing. Like explain a little bit what rent to own is and why you like this asset class.
So why I liked it is actually very different than why Neil liked it at the beginning. My draw to it was from an investor lens where I don't like tenants and toilets. And I really wanted to invest in real estate without those typical hassles. I wanted more of a purposeful way of making money. And for me, the purposeful part was that rent-to-own allows us to help people. But on the other side, it also was purposeful for us because we were looking to replace job incomes or offset some corporate income at that time. And I needed high cash flow. And a typical rental property just wasn't cutting it. Because, there's tenant turnover, so rents can be unpredictable. Some tenants don't pay, and getting them out is complicated. So I just like, oh my gosh, this isn't going to give me the type of cash flow that I'm looking for. I want easy breezy, peace of mind, predictable, consistent, so that I can just stack these rent-to-own properties and know what my cash flow play is going to be. So that was really why I was looking at rent to own. Neil, of course, said no to it initially, but then eventually said yes. Why did you say yes?
I had enough information to base a yes on it. I'm in the same boat, Rav. We went and looked at rental properties way back when. It wasn't my cup of tea at the time. I certainly wasn't seasoned in real estate. So for me, it was like looking at these properties that were lived in by hoarders, and we're walking through boxes and stacks of stuff, and carpet is worn through to the ground or the wood underneath. I was like, I can't do this. I have to invest money to make sure that these people are living their best life in my property. And that wasn't exactly the way to make money back then anyway, in a rental unit. So with rent to own, it allowed a little bit of a different play. We allowed people to buy their own home, select their own home, right? They got to go look. They had a home inspection done in the property. We knew what was right or wrong with the property before we bought it. And they maintained and managed the property, right? All the while giving up a down payment that allowed us to leverage that against the property as well. So for me, once I had that information, it was a clear-cut yes, for sure.
And, we mentioned we're talking about cash flow, and it's a great vehicle for cash flow. And, once people are introduced to rent to own, there's people that do, 4, 5, 6, 7. I remember last season we had you guys on, and I think somebody had like 7 properties. And so each one's cash flowing, and, they can basically not have to work as hard or not even work at all in their, typical day job, if you will. I mean, it's actually what you guys did. You guys, quit lucrative corporate jobs, and we're kind of doing this full time. And so, but what happens if somebody doesn't want to quit their day job? They don't need cash flow. Rent to own is still a great vehicle, yes?
Yeah, absolutely. So with rent to own, an investor can make money in 2 ways. You can make money through the monthly cash flow, and that can be very lucrative. But the other way to do it is you make less cash flow and more on the back end. And the back end is really triggered by the sale of the property at the end. So rent to own is really kind of a medium term hold where you own the property for about 3 or 4 years. During that 3 or 4 years, the tenant buyer is becoming mortgage ready behind the scenes. They're improving their credit. They're building up a bigger down payment. Potentially they're making renovations to the property. So they're building up equity. There's a whole bunch of stuff that's being enabled for that family to overcome the barriers to home ownership. And for the investor, there's the cash flow play for the full 36 or 48 months. And then at the end, the property is sold to that tenant buyer at an appreciated price. So there is a profit from the sale. So one of the ways to profit on rent-to-owns is to help a home buyer that has a big down payment today, but still can't qualify for a mortgage. Well, that means that they're putting $40,000, $50,000 into the deal at the beginning. That means I have to put in $40,000 or $50,000 less into the deal at the beginning. I have more leverage, plus I have the bank financing compounded. That gives me bigger leverage and ultimately a strong rate of return.
Yeah. Okay, great. So what I hear you say is I can have a cash flow component, and that can be increased depending on how we structure the deal or how you guys help me and the tenant owner structure the deal. Or I can take less cash flow if I don't really need it and then have more capital appreciation. So, my $100,000 can well, let me ask you that. What kind of typically is a return? I mean, I know some people are using cash money, some people are using now their home equity line of credit, so I guess it will kind of depend. But generally speaking, what are we looking at on a 3-4 year deal? Kind of give me a range on a return on investment.
So when we're doing a deal in the, say, $540,000, $550,000 price point, we'd be in for about $110,000 of our own capital. Well, if I don't have that capital sitting in a savings account, which I definitely don't want to because it's not doing anything there, it's not making me any money, I'll look to see, well, what do I have sitting in my line of credit? And then I'll use that line of credit to put down as my 20% down payment on an investment property. And that, of course, triggers kind of a higher cost of borrowing. But technically, I think you call this infinite returns. Why do you call it infinite returns?
Well, technically, you're not using your own money, right? You're using the bank's money, which will then be replenished on sale back into your HELOC. And then you're left with a chunk of cash that's sitting in your bank that now is yours, right? So nothing out of your pocket. The tenant buyer, through their monthly payment, is actually paying the HELOC back monthly for you. Still leaves a little bit of cash flow, believe it or not, but your HELOC is covered. And then what happens at the end is, let's just say you've invested $120 into your HELOC and $30,000 of that is paid back through the monthly cash flow. Now you owe $90,000 to your HELOC. Well, on closing, you might get a check for the $120 right off the bat to cover the HELOC because that was your initial investment. But you minus the $30, you've just made $30,000 on the HELOC alone by having someone else pay for that. Not to mention the amount that's left over after you've sold the property, which is probably another $70,000. So now you've walked away with $100,000 in your bank without having to actually use any of your own money. It's when you do that, if you try to work out those numbers, it's infinite, right? Yeah. There's just no number that goes with it.
Yeah, I mean, what I heard you say is if I'm investing $100,000 or so, even just on the back end, I can get $70,000, $75,000 over 3 years. We're looking just north of 20% annualized returns. It could be kind of give or take. And then also what you guys have taught me over the years is it may not be me. Probably I'm not putting the full 20% because that tenant and buyer, they're putting in 4, 5, 6, 7, 10%. As well, right? So then as an investment property, because I'm on title, I'm putting 20%, but maybe I'm only putting 15% because the tenant buyer is putting the other 5, correct?
Correct.
And then with the monthly expenses, they're giving me above and beyond for my own security as well. And then we work it all out at closing, but the paperwork was done since day one in terms of what it's going to look like.
Also correct, yes.
Yeah, the key with rent to own, I think a lot of people forget this. When you have an investor lens, you talk in terms of cash flow and in terms of rate of return. But really, this is a strategy that helps another family overcome their barriers to getting qualified for a mortgage with the banks. And we have to make sure that the exit is going to get them to that goal. So when we talk about initial down payment from that tenant buyer, we have to work out how much are they going to be paying over and above the rent to be able to accumulate a big enough down payment to actually exit into a mortgage position. So these are all the things that are accounted for on the front end. And this is where the complexity of rent to own really is different than a lot of other investing strategies. And this is the stuff that Mr. No is really good at.
Yeah, no, that's perfect. Listen, let's take a quick break and then we'll talk more. Thanks for watching, everybody. We're talking to my friends Rachel and Neil about how we can make money, or Neil and Rachel, depending which one you ask, how we can make money investing in the rent-to-own strategy. Don't go anywhere. We'll be right back.
Hey, it's Sarah Larby here. Did you know that if you are selling your home or investment property, one of our preferred agent partners will sell it for you for free? That's right, 0 commissions. Head over to our website, everydayinvestor.com, to find out more.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
316 Junction, in the heart of the junction, right across from one of my favorite restaurants, Piri Piri. And as we can see, high demand for rentals. This is an all-purpose rental building near completion. Not enough units in the area to match demand. This is a fantastic investment. Thousands of units scheduled to be built. Get here first access condos, don't be second.
Hey, it's Rob. Welcome back to Everyday Investor. We're talking about how to make money with the rent-to-own strategy. Okay, guys, so this is, I love this because, Neil, you talk about, this concept where it's kind of, we don't want to ever say anything's a step above or a step below, but it's, the kind of the big brother to the traditional buy and hold. Why do you say that?
Well, in this market especially, Rav, where variable rates have taken such a jump, there's a lot of people who own rental units where their rent is no longer covering their expenses. So they might be in the hole $100 or $200 a month. It's out of their pocket. I think for some, it's frustrating. They panic themselves into selling, and then they're now out of the rental game. What rent to own can do is if you buy one rent to own with a cash flow of $800, $900, or $1,000, and you lock it in, not variable, but you lock into a fixed rate, you now have guaranteed cash flow, which will cover those other properties that might not be covering right now, right? There is a chance that these rates are going to be coming down in the next year to 2 years, so they will cash flow again. This is sort of an interim step to helping cover those shortages, and then you still have the profit that's going to come from a rent-own at the end of the rent-own term.
So on the example that you guys gave, on a property kind of 500K-ish, maybe a little bit more, 540, 550. What can I expect for cash flow if I wanted to be aggressive with cash flow? How much could I expect, in a rent-to-own situation?
So on that $500,000 property, roughly, if you use your own personal funds as a source of down payment, you'd be cash flowing probably about $900.
Wow. That's we're not talking per year.
Per month.
Per month, right? That's
and that's really important to know that factors in mortgage, property taxes, and property insurance.
That's great.
So that's $900 after those expenses have been paid.
And there's many pockets here in the metropolis, in the Greater Toronto area. Where this might not work it'll work, but our returns may not be as high, but we don't have to invest just in our own backyard. I mean, an investment's an investment. And so talk to me a little bit about that. I mean, I know you start in an area, and because you work with, Neil, you're a licensed mortgage broker, so you can help me on that end as well, correct?
Well, I could. I tend not to for a couple of reasons. Number one, conflict of interest. We like to use a third-party mortgage professional to help with the mortgages. Number two, I'm not going to lie, I'm just too busy. The reality is we're dealing with 30 to 40 applicants a week. So it gets very hectic, and I just
No, but
wouldn't be able to get the time.
what I mean, because I have friends that you've helped, and what I mean by that is they may be using a third party, but you have an eye on it, like, hey, this doesn't seem right per se, or so on and so forth. I mean, you have the expertise to be able to help me fix my credit, to be able to look at maybe this mortgage. If somebody says, yeah, your interest rate is 15% for your mortgage, well, let's put on the brakes for a second. But then you guys also have realtors in different areas. Back to my point of, I don't have to just invest here in Toronto. Where are some other areas that you're finding people are really finding great success outside of the GTA?
Yeah, I think a lot of investors, when they think about real estate and getting an investment property, they did kind of what we did at the beginning, where they bring in a real estate agent to start showing them lots of properties. You drive around and it feels like it's a never-ending abyss of looking at houses. And in rent to own, the way we structure it, it's actually very different. So we have a turnkey model. And in this case, we have real estate agents, as you said, in various strategic parts of markets that we cover. So one of those markets is Ontario. Another market is Alberta. So in Calgary, for example, we have real estate agents that are rent-to-own savvy, part of our network. They know what they're doing, and they're actually the boots on the ground. And they go out looking at properties with the tenant buyer. The real estate investor is not involved in that house hunting process. It saves a lot of time, a lot of agony. And what we're doing is we're allowing those investors, even though they might be living in Ontario, for example, you don't have to jump on an airplane. You don't have to waste any time going to look at properties. We've got you covered to invest beyond your backyard with a qualified team of professionals. And they're the eyes and ears on finding that property. And when they find that property, Mr. No, that's that property.
Okay, so rent to own, I can do right here in Ontario. I can do in Alberta. If we look at ROI, when we look at everything, including cash flow, we can be looking at, north of 20%. I mean, again, there's people that I know that have made 30%. And what's exciting about all this is I know what my returns will be right up front. It's not like we're hoping for something to happen. We know what the returns will be, especially if I have a fixed mortgage rate for 3-4 years. I mean, if it's variable, of course, it's going to fluctuate like we're seeing a little bit now, but we're still, positive for the friends that I know that have contacted you. They love the investment, even though maybe it was a variable rate and a little bit less, 20%, north of 20%. When do I get this? You mentioned 3 to 4 years. Does it depend on how much the tenant buyer, how much time they need, or whether it's 3 years, 4 years, 5 years, what dictates that?
So when we're qualifying the tenant buyer, there's a couple of things we look at. Number one, what is their current down payment? And realistically, what is the timeline they need to build it up to 10%? Right? So doing a 2-year deal would make their payments very hefty. So maybe we do a 4-year deal in that case, which stretches them out a little bit so they have more runway to build up their down payment. The other consideration is their debt, their credit. So is their credit in such a place where most people need minimum 2 years to repair credit. Like I'm talking fairly bruised credit. But sometimes they come to us with good credit, just higher debt. They have a car loan of $70,000, which is, making their debt to income ratio off a little bit. Well, they might need 3 years just to have that paid down on a natural, month to month payment. So with that being said, we look at the best possible solution that's going to fit that tenant buyer and allow them the opportunity to exit at the end. So anywhere from 2 to 4 years typically is what we're looking at for most people coming into our program.
No, that's great. And why I love this strategy is it's a win-win. Like there's a feel good in this as the investor, right? I don't know if benevolence is the right word, but you're helping somebody. And then I know, Neil, that you also help that tenant buyer with their credit to make sure that, hey, we're not going to just leave it, leave you high and dry. You guys are actually the broker of this kind of deal, bringing the investor and the tenant buyer kind of together and doing this all. And when we talk about these returns, these are net of your fees. You've got to feed your family as well. But these, 20 to 30% returns. By the way, I should put annualized, not the whole it's not 20% over 4 or 5 years. These are kind of more annualized. You can, make 80, 90% or more over the duration of it. But that's what I like about, and why I tell people to talk to you, because you take care. We take care of. And so it can be a win-win. I mean, I've often said, when I used to do this way back in the day on a napkin, when someone didn't come through as an investor, I still won. But that's not a good feeling. I want that person, unless they've changed their mind, and it's okay that they've changed their mind. But if their credit wasn't fixed or whatever the case was, yeah, that's never a great feeling. Okay, so our ROI can be 20 to 30%. We get it in 3 to 4 years, depending. There's the $900 or so cash flow component on this. So people are watching this show and they're like, well, Rav, this kind of sounds a little too good to be true. What would you say is the risk? What's the downside on a rent to own? And of course, it's hard to be objective, because really the answer is, who's structuring it for you? What's the terms, the conditions? And you've done, what's the number? How many have you done now over 10 years? How many have you guys done?
We're getting close to helping 1,000 families.
Wow, 1,000 families. Okay, so but as objective as you can, what should we be looking out for when we're considering a rent-to-own strategy as an investor?
So you touched on the risk question, and I just want to jump back onto that. When it comes to rent-to-owns, your risk is definitely insulated compared to having a rental property, because with a rental property, somebody is just paying you first and last month's rent. With a rent-to-own, a big bonus is that the tenant buyer is giving you $25,000, $35,000, $45,000, depending on how much they've saved up. They're giving you a lump sum towards the purchase of this property, and then they're going to be paying you each month in increments towards a bigger down payment, which is part of the reason why you have such big cash flow here. So the risk lies in if they make a stupid move to stop paying. And you have to remember that these down payment installments that they're making, and that initial down payment, most of it is not refundable, and it stays with you as the investor, and that offsets your risk. But if a home buyer has a job loss, they can't keep up with the payments, if they get separated or divorced, rent-to-own can't fix that.
Or they make a stupid decision, right? I'm starting to realize the human element is the one thing we cannot control. And what people think is the right decision doesn't always necessarily lead to the right output. And so that kind of goes hand in hand with what Rachel's saying.
So if they stop paying for whatever reason, if their personal circumstances change, you, of course, have to get them out of the property and follow the standard process of that, provincial guidelines to get people out. But what's nice about it is that you have that cushion of that initial down payment that they gave you. So it gives you buffer. And then you have multiple exit strategies. Okay, well, you can put in a renter into that property. You've already pulled out quite a bit of capital. So the property might be in a good position to cash flow, or if it makes sense, if the timing is right, sell the property or do a midterm rental with it. I mean, there's different exit strategies. And I think that is one of the beautiful parts of risk mitigation when it comes to real estate. I, as an investor, love to have those control mechanisms at my fingertips. And when we work with investors who are tapping into the turnkey services that we offer, we are their guide when things go topsy-turvy. Neil is a master at figuring out how to get out of a situation that wasn't planned. When things are going off the rails, he knows how to navigate different, seasons, different economies, different real estate cycles. So our investors are never left to their own devices to figure it out on their own. He offers a tremendous amount of support.
Guys, I love this. I love you guys. And time flies when we're having fun. We've got to go. Look forward to you coming to Brampton for some good old Punjabi food. And look forward to having you on the show again soon. Thanks.
Thanks, Rav.
And thank you guys at home for watching. Without you, we would not have a show. If you want to get these episodes directly into your inbox, go to everydayinvestor.com and sign up. Until then, we'll see you next week. Same place, same time. Honey, I love you. I'll be home soon. God bless everyone.